This is live broadcast with DJ Banks Diamond. Join me as I talk about trade. Have you been looking for the best wallet? You can get 50% by using the link below or your off-your deposits. All you gotta do right now, click the link, use it, sign up with the link, and get 50% off your deposits. Trust me, come let's trade together. This is the best way to make money online. 50%. No lose, no gain. The right side of the market based around trend, which is why that last section was so important. But the specific way we are going to do that is by utilizing Are you ready to make money while using your mobile phone? Stay tuned with DJ Banks Diamond on the live broadcast. Time frames. Our first time frame needs to be one time frame up from the time frame we plan to trade on. And we're going to dive into that in just a second. And our second time frame is going to be the time frame we actually place the trade on. So here on the Aussie Canada, the trade was placed on a 5-minute chart. So what I mean by what I just said is that where we find the trend of this market, in order to be on the right side of the market when we place our trade, we want to be in line with the higher time frame trend. In order to find that, if we're trading the 5-minute chart, then I'm going to look one time frame up to the 15-minute chart. Now, as you can see right here, this is all the time frames that I use. So I always go up one time frame with this strategy. If I'm trading on the 15-minute chart, then I'm going up to the 1 hour. If I'm trading on the 1 hour, I'm going up to the 4 hour. If I'm trading on the 4 hour, I'm going up to the daily. Now, I rarely go up any higher than that, but that is the exact difference in time frames that I personally use. So again, on this chart, what trend are we in? You can tell because I already have it drawn out for you, but this is an obvious downtrend because we have a starting point right here, which is one of our major swing levels. We then have a major swing level here, a major swing level here, and a major swing level here, followed by a lower high major swing level and a lower low major swing level. This tells me that I'm definitely in a downtrend. I know for a fact I'm in a downtrend at this point, so if I want to align myself on the right side of the market based on my higher time frame trend, then I want to be looking for short trades. So the first step in this strategy is we are aligning ourselves on the right side of the market using higher time frame trend. After we have our higher time frame trend, another reason that it was extremely important for you to understand the concept of major swing levels is because once a major swing level is broken, that is the level you want to look at for trend continuation. So as this market pulls back up to this area, that's where I want to look for possible opportunities to hop on that trend and ride it to the downside. As you can see, this works out very often. If we go back right here to our previous major swing level, yeah, I know I widened that area a bit, but these are zones, not just lines on a chart. You can see that this is exactly where the market pulled back to before pushing down and breaking another major swing level. So we're expecting that to continuously happen until the market shows us it doesn't want to do that anymore by breaking through this major swing level, or resistance level, and creating a possible reversal. So with all that being the case, after identifying my trend and identifying the previous major swing level that was broken on my higher time frame, and in this case, that is the 15-minute chart because I'm planning to trade on the 5-minute chart, the next thing I do is extremely simple. I just drop down to that 5-minute chart. I wait on the market, asset, whatever it is I'm trading, I'll wait on it to come back up into this area. And then I want to see rejection. And I have very specific rules for that rejection too. I'm not going to leave you hanging on the entry reason. Don't worry. The whole point of all of this, by the way, is to make sure we have, what did we say at the beginning? If you're going to be a successful day trader, if you want to make money from day trading, you need a strategy that's rules-based so you can stay consistent to it and it's proven to make money over time. This is a strategy I've used for nearly a decade and it's proven to make money for me during that time. And it's also so rules-based that you can stay consistent to it. One rule is higher time frame trend. Let's align ourselves with that. Second rule, look for the last major swing level that was broken. You know how to do all that if you paid attention throughout the video already. The third rule is rejection. And the way we're looking for rejection is by looking for the market to create a high, come to that high, and then be rejected from it by pushing lower. This is known as a double top, and it's an extremely simple price pattern that I use for entry reasons. Now, one small caveat I do have is that after this double top, I want to see a red candle. So we have a test, we have our second test of a resistance level, and then I want to see a red candle here for the push down. You will see that on the chart for this trade right now. Okay, so here we have the market exactly where it was whenever I entered this trade. Everything's lining up about the rules we just discussed. We're in line with our higher time frame trend. We're at the previous major swing level that was broken. What did I say I was looking for? Well, as you can see, as we push up here, we get a high, but then the market's not ready to continue lower because why? We break through that high and make a higher high. So at this point, I'm not interested in going short and trying to ride this trend down until I get actual confirmation. And do we get it here as we push back up? No, we get a move up that ends up closing above our previous high. We get no rejection at this level. So what I'm waiting for is when this market is pushed down, we get a push back up to that same level, and then we see rejection being this red candle right here. And my exact rules for this, I'll go ahead and share them with you, is that for a double top, I am looking for the market to push up and get between the high of the wick and the highest bodies of this entire little area. And I'll explain that in just a second whenever I get this a little bit darker for you. So this is my area. It's between the highest bodies of this previous swing high and the highest wick of this previous swing high. What I want to see is wicks of candles touching this area. Bodies of candles can close in this area. The only thing that cannot happen is I do not want to see a close above here because that's... Let's go for break. Are you ready to make money? Why using your mobile phone? Stay tuned with DJ Bounce Diamond on the live broadcast. You are listening to DJ Bounce Diamond on live broadcast. That's exactly what's been happening, right? That's not showing rejection. Close above, close above. What I want to see is rejection. So a wick needs to get into this zone, or a body needs to get into this zone of a candle, and then I want to see a red candle showing me that sellers are trying to take control. When you combine all of that, and you have your alignment with the higher time frame trend, you have the market inside of a major swing level, the previous one that was broken. That is major structure, and that's one of the most likely places for a market to continue in trend. And you add all of that to an objective entry reason as powerful as a double top with selling pressure afterwards, that being that red candle, then what it creates is a consistent way of trading because there's rules for every bit of it. So that equals consistency, right? And it creates a money-making edge played out over a large sample size, at least from my own point of view and my own trading that I have done with this strategy. It has been one of the best I've discovered in the past 10 years of my own trading career. And we all know already how this bad boy played out, but we'll hit play and watch it one more time because it was a beautiful trade. And earlier I said it took 2 hours. I think it took like an hour or so for this whole trade to play out and hit about a 2.4 to 1 reward to risk ratio. But this is a bearish version of the strategy. Hopefully that was extremely clear. But just to clear things up a little bit further and to give you an example of a bullish version of this, what we're going to do now is go to a different chart and take a look at a bullish version of this strategy. I'll see you there. So, remember when I was saying that this works on all different markets and in all different time frames? Right now, we're going to be looking for a trade on the 15-minute chart. So, what time frame will I be looking at if that's the case for my trend identification to make sure I'm on the right side of the market with this trade? If I'm trading on the 15-minute, I want to look up at the 1-hour chart for my trend identification and that major swing level that was broken last. Just to be sure that you understand this, because it is a pivotal part of your trading career to understand major swing levels and how to draw out a trend. It will play a vital part in nearly any strategy that you try to trade, or if you're just someone that is going to trade with a discretionary approach, you need to understand how to identify trends. So, from this being our starting point, we have a push up to a major swing high, pull back to a major swing low, push up to a major swing high, pull back to a major swing low, push up. Where do we break this level? And remember, feel free No way that's going to work. Remember, feel free to put horizontal lines at your major swing levels. So at this point, we know that this would be our major swing level if we had more of a pullback. Really, it's right here. Again, no way to make this completely objective. It just depends on how you see the market. From here, I would go to here, then move my horizontal line up. We have a major swing level that's broken here. So now we would have this move to a major swing level, back down to an equal low for our major swing level, back up now. Where do we break here? Right over here, right? Since we broke right. You are listening to DJ Bounce Diamond on live broadcast. Right here, that means that I'm now looking at this as my next major swing level. This is my next major swing low, major swing high. If we move the chart forward now, and I click the button one time, you'll see that we have this pullback. So what are we doing? We're in an uptrend. Which direction do we want to trade? To the upside, right? What do we need to point out? We need to point out and draw a zone near our last level of resistance, our last major swing level, which is these two right here. I'm combining them here because they are so close together height-wise. Since they're both really, really close to around the $278 mark, I'm just putting that in the middle of the zone. This is just how you'll have to draw out zones. They're not lines on a chart. Support and resistance are a lot more like zones. So in this case, we have our area that we're looking at, the previously broken major swing level. Again, we're just splitting the difference between these two because they're so close together. And we have the market in this area. What's the next step? At this point, we want to drop down to our actual trading time frame, which is going to be the 15-minute chart in this case. And now we can actually look for, what are we looking for if we're looking for a bullish trade? It's not going to be a double top, right? We're going to be looking for a double bottom in this case. So there we have a push up. What we need to see is the market come down and now reject this area here. Somehow, some way, it needs to come down and show us rejection of that. And the way we do that is just by candles getting into that zone, whether that be by wicks or by candle bodies themselves, and then a green candle to show us buying pressure out of it. So we keep pushing forward. We're in the zone, and now we're still in the zone, and boom, we now have a green candle. This would be our actual entry. The close of that candle / the open of the next candle would be the entry for me and the way I trade this. After that, I would just have a stop loss below the lowest low of the rejection of the double bottom. After I had my stop loss place, my target would be back up at the previous resistance level right over here. And I would probably pick this one just because it's slightly lower than the other. So let's do that. Still set up with a 2.3 to 1 reward to risk ratio here on Litecoin. And let's see how this plays out. As you can see, the market takes off to the upside, easily hitting our targets. So that's a bullish version of this strategy. So now let's dive into a recap of everything here on the chart of Microsoft. As I said, works in all different markets and on all different time frames. We're looking at the 4-hour chart. After this, I have something extremely important to share with those of you who are actually serious about starting a day trading career. So look forward to that after we go through this recap. Right now, let's recap what we've already learned. Let's use every bit of that strategy here on Microsoft. So on Microsoft, we start from a starting point that is right down here. We have a push up to a major swing high, a pullback to a major swing low, a push up, a pullback. We're just drawing it out again as a recap. And to make sure you completely understand this, pullback to here. When do we break above this high? Right here. Okay. So we break above the high. We have another pullback, and this pullback then creates a new high for another major swing level. At this point, what's the trend on our 4-hour chart? We're going to be trading on the 1 hour, so we just went up one time frame. On our 4-hour chart, we are in an uptrend. While we're in this uptrend, what is the latest major swing level that we broke? It is right here. This is the latest major swing level, according to the rules for our trading strategy that we've broken. Now we have a pullback into that level. Let's drop down to a smaller time frame. If we're looking for the higher time frame trend and structure on the 4-hour, that means we're trading on the 1 hour. Again, as I explained earlier, and since this is a recap, I'll go over everything. So if you're on the 5-minute looking for trades, you look for structure and trend on 15. If you're on the 1 hour looking for trades, you look for structure and trend on the 4-hour. And if you're on the 4-hour looking for trades, you look at the daily for your trend and structure. Now, let's drop down to our trading time frame. What are we looking for here? Well, in the case of a bullish trade, we'd be looking for a double bottom. Does this meet the rules for a double bottom? Yes, it does. We have a push down. We have a bottom. We then have a neckline. We're looking for a retest of this area without closing below it that gives us buying pressure. We then get a green candle followed by an even bigger green candle, which is where our entry would be on that buying pressure candle. For stop loss, we would go below this low, and I use something called an ATR indicator. I have a full video for that. It's up in the left-hand side of your screen, right-hand side of your wherever it's at. It's in the cards. You'll be able to see it. It should pop up right now. ATR is right up here, and what it shows me is that we currently have a $2.31 ATR. It gives you the average movement of the last 14 candles. It's pretty much what the ATR does to keep you in line with the volatility of the market. So below our swing low, I want to go down $2.31. If our swing low is at 185.20, then I want to be at somewhere around 182.89 for my stop loss. So 182.89, that's going to be close enough, even though it says 92. I want my target to be back up at previous resistance right up here, the previous major swing high. Then I hit play. We'll see how this plays out. And as you can see, eventually coming up and hitting those targets, we did have a little gap down here, but it didn't even come close to the stop loss. So there is a recap of every part of the strategy. Hopefully that was good enough to get you to a point of completely understanding the strategy, but the strategy is not all you need. Get free wallet today by using the link below to get your wallet and get 50% off your deposits right now. Thank you for listening to DJ Bounce Diamond Broadcast.